Hi, I'm Shaun Dawson, Head of Insights at DeVono Cresa, and I'm just going to give you a short overview of the Central London office market as at the end of Q1 2018. So if we kind of go back towards the end of the year, 2017 ended on a high with leasing activity above average at 13 million square feet. One of the most noticeable things of take-up during 2017 was the increase in serviced office and flexible office providers taking space. Development activity started to tick downwards. However, availability started to increase across the year. So leasing activity in the first 3 months of the year, as this chart showed, has pretty much carried on from where we finished the year. So buoyant demand. 2.6 million square feet was transacted in the first quarter, heavily led by the take-up of grade A space, so 44%, leading to a shortage of supply in a few areas across central London. And this is going to reignite some developers' plans to dust off their schemes and start developing. So which sectors have been driving demand? So the financial sector has taken the majority of the space at 23%. This is quite surprising, especially with Brexit jitters and a lot of press attention on the financial sector being impacted by the decision to leave the European Union. However, across the spectrum of financial businesses that have taken space, it ranges from large overseas banks down to the typical hedge funds taking space in Mayfair. Nevertheless, serviced office providers and co-working providers are still on the hunt for new space, and they've also been taking space this quarter. Technology firms as well, so they continue to be attracted to London office space, especially the software and fintech companies, accounting for 16% of the share lease. Pre-letting or early letting of space that is under construction has continued over Q1 with over 600,000 square feet of space leased, yet the volume of space which is under construction and is available is continuing to be eroded. So what of availability? So this next chart shows that availability came in at 16.2 million square feet at the end of Q1 2018, which was down from the end of 2017, albeit just 1%. Nevertheless, the total volume of space that is on the open market at present is 14% higher than where we were at the beginning of 2017. Yet it's the type of space that is the differentiator here. So the majority of the space, so 77% of the total that is available, is second-hand space, and it's that remainder that is dwindling and eroding, as I've just mentioned, which is the grade A space. This is, of course, going to have an impact on rental levels. So this next image just highlights that over the past quarter, we haven't really seen much change in the prime rental levels. Just a few locations have seen rental rises, so City Core up to £68.50, more elevated levels in the western part of the city. Camden, a little bit of anomaly there, has kind of seen a big increase over the quarter. Mayfair, St James, no movement for the fifth quarter in a row. So what of the next quarter? Well, with over 3 million square feet that is under offer, we do expect to see tenant demand continue and remain buoyant as some quite high-profile property requirements are satisfied in the market. The pressure on grade A is still going to be there. We're still going to expect to see a reduction in development activity, but the commitment of developers will start to ramp up a little bit more, potentially more opportunistic refurbishments coming to the market as they try to satisfy the demand that's coming through. Availability is still expected to be above the average, with second-hand space sticking, and this kind of begs the question that landlords need to start to differentiate their stock and their stock that's actually kind of staying on the market for quite a while to attract the occupier and the demand that is still out there. And all the while that this is all going on, we're still going to have the Brexit uncertainty. We're still going to see some global political uncertainty. But as we near towards the October deadline for Brexit negotiations, we should start to see a little bit more clarity, which should start to give a little bit more confidence to occupiers who are making that next move in terms of their real estate strategy. If you need any more information on this or just a chat about the market, then please do get in touch.